Hey guys, so in this video I'm going to talk about Square stock. Now Square is a financial technology company that was founded in 2009 by Jack Dorsey and James McKelvey. You probably know Jack as the CEO of Twitter, and they essentially started the company to enable small sellers to take payment using debit and credit cards without the need of an expensive point of sale system. They launched their first app and service in 2010, which was essentially a small little Square card reader that you put into the headphone jack of a phone, and hence the name of the company was Square. The company actually went public then in November 2015, and it's been traded under the New York Stock Exchange under ticker symbol SQ. And Square is getting hyped as the company that's going to disrupt the banking industry by significantly reducing the costs associated with delivering financial services to businesses and to customers, but also by improving the quality of those services through technology and innovation. And this is where the name FinTech comes in, so it's financial technology. Up until 2013, Square's revenues were predominantly driven by its seller ecosystem, which allows sellers to distribute their products, receive payments, manage employees, and analyze data related to their business. However, in 2013 then, Square released its CashApp, which offers financial services to individuals and is a direct competitor to PayPal's Venmo. Since its release, CashApp has seen massive growth, and as such its future and the disruptive impact it can have has been highly anticipated. In this video, I'm going to take a look at Square's business model by focusing on its key revenue segments, and I'm going to look at the future growth opportunity for each. And finally, I'll give you my opinion on Square stock and my strategy for investing in this company. My goal with this channel is to bring you non-biased, thorough research without boring you to death. So if that's something that you're interested in, then consider subscribing to the channel and hit the notification bell so you're notified of any future videos that I release. If you're feeling so kind as well, I'd really appreciate an early thumbs up, because it really helps promote the video through the YouTube algorithm. So with that being said, let's get into it. So as I mentioned then, Square's business consists of the seller ecosystem, which is focused on serving businesses, and then CashApp, which is focused on serving individuals. We need to look at both of these independently to get an overall picture of the company. So let's start by looking at the seller ecosystem, which is the legacy side of the business. Square's seller ecosystem is a cohesive commerce ecosystem that helps sellers start, run, and grow their business. They offer a combination of software and hardware to enable sellers to turn mobile and computing devices into powerful payment and point of sale solutions. Their tools help sellers make informed business decisions through the use of analytics and reporting. Sellers can manage orders, inventory, locations and employees, engage customers and grow their sales, and gain access to business loans. So it's a one-stop shop really for sellers who previously would not be able to afford an expensive point of sale system, never mind inventory management and HR softwares. Square offers the same solutions but for a much lower cost and in a much more integrated way. As I mentioned, they also offer loans to small businesses. Square monetizes these products then through a combination of transaction, subscription and service fees. I'm not going to go through these offerings individually because I don't think there's much value in that. If you just go to Square's website, you can very easily see all the offerings that they provide to sellers. But I am going to go through the financials in a little bit of detail, because I think this is what's important here when we're looking at this company. And Square also generates the majority of its revenues from its seller ecosystem. So I think it's very important that we spend a bit of time looking at that. Okay, so let's start by taking a look at Square's gross payment volume. And this is essentially the amount of money that's processed using Square's services. And it's a really good indication of the growth of the business. The gross payment volume has grown at an average of about 25% year over year, from 6.5 billion in 2012 to 106 billion in 2019. Now, if we look at the most recent data from their Q1 2020 shareholders letter, we can see that the growth rate in Q1 has dropped to just over 14% year over year. And this is caused by a significant drop in the last 2 weeks of the quarter due to the impact of the stay-in-place orders. And this is no surprise, because when you look at Square's customer base, you can see that most of them are actually in the worst affected industries. I mean, you have 26% in the food and drink sectors, 17% in retail, and then 15% in professional services. So the bulk of Square's GPV comes from these industries, which are directly impacted by the stay-in-place orders. But if we look at before the stay-in-place orders as a way of kind of assessing Square's business, then it's very clear that the seller's side of Square's business was actually booming. Then during the last 2 weeks of the quarter, the seller ecosystem experienced a significant slowdown, with seller gross payment volume down 35% on a year-over-year basis. Square say that this may cause a variety of outcomes for their financial results in the upcoming quarters, depending on the length and severity of the impact. And they're expecting a real material impact in their second quarter results. And as a result, they're not providing any guidance for the full year 2020 earnings or revenues. If we look at the loan side of Square's business then as well, basically Square uses all the data from its services to offer loans to sellers that are tailored to their needs. So these loans are much more flexible in comparison to your traditional bank loan. So Square will agree flexible repayment options that suit the business's needs. So if the business is very seasonal, Square will kind of adopt to that, which is great. And in the fourth quarter of 2019, so last year, Square distributed 97,000 loans for 671 million. And that was a 40% increase from the prior year. So this side of the business is growing substantially. Now currently these loans are facilitated by Square, but they're lent by a third-party bank. However, in March of this year, Square was granted a license by the FDIC to issue industrial loans so it can lend to sellers directly. And this will be done under the umbrella company Square Financial Services. And Square expects to launch this side of the business in 2021. So this should increase Square's margins on these loans going into the future, because from 2021 on, or whenever they get this piece of the company up and running, they will not be paying fees to third-party banks like they are now. In terms of the financial numbers then for the first quarter in 2020, Square's seller ecosystem generated 853 million of total net revenue and 356 million of gross profit, which increased 16 and 18% year over year. So the key message here really is, they have 40-45% gross margins, which are very, very healthy, and then a healthy kind of 16 to 18% year over year growth. But what I will point out here is, we know that the stay in place order carried over into Q2, and it's going to have a much bigger impact on Q2 than it would have on Q1. So there's a real watch out here for me. I think long term, this is a great business. The seller ecosystem is clearly growing, it's clearly adding value, but I would worry that it's going to severely impact Q2 numbers, hence why they withdrew guidance. So Square has clearly made itself indispensable for these smaller businesses, offering them a one-stop shop for all their business needs, whether it's invoicing, whether it's loans, whether it's inventory management, or even HR. And using data and analytics, it's able to integrate technology and financing together in this platform. It's had great growth in the previous years, and there's no reason to think it won't grow into the future, with the caveat of, as I said, Q2 potentially being massively impacted. So with CashApp then, Square are building a financial ecosystem to help individuals manage their money. And with CashApp you can do things like buy Bitcoin, you can buy fractional shares in companies, and these capabilities really make CashApp very attractive for the target market, which is that 15 to 35-year-old range. Since 2017, CashApp have grown their monthly user base from 7 million to 24 million in 2019. So we're seeing massive growth rates here for CashApp. And if we compare it to PayPal's Venmo, using data from ArkInvest, we can see that while Venmo has had a lead, CashApp is quickly catching up and will probably outgrow Venmo in terms of monthly active users within the next year. They've also managed to grow their revenue per customer from about $15 in 2017 to $30 in 2019. And this is a really important number because, as you can imagine, right, so 24 million active users, but it's what they're spending that matters. So if CashApp can grow its user base but also increase the revenue generated from each user, then we're going to see exponential growth in this business. It's kind of a two-pronged approach. It's not just a one-layer dimension of growth. It can actually do both. And over the past 3 years, CashApp has tripled its monthly active users and doubled its growing revenue per active user. So in Q1 2020, it generated 528 million total revenue and 183 million gross profit. And CashApp is on track to do 2 billion in revenue this year with 35% gross margins. Now it's really important to differentiate CashApp's revenue because, okay, they made 528 million dollars in revenue in total in Q1 of this year, but $306 million of that actually came from Bitcoin, which only led to a $7 million gross profit. So the margins here on this are absolutely atrocious. It's basically a service as opposed to a profitable side of the business. The other $222 million then came from subscription and transactions on CashApp, and this generated $176 million in gross profit. So this is an 80% gross profit margin, which is absolutely massive. I will say I do like the fact that they're attracting users to the business by using Bitcoin, because I think obviously a lot of people in that range of age are looking to purchase Bitcoin, and if they get on the CashApp platform as a means to do that, then they're going to probably stay there, and CashApp can generate earnings from them by offering them different products. And it's really the network effect. Once you go to the bother of joining up, you get a card and you start putting money into it. You know, you might want to do other things like start buying shares or using it to pay for things or peer-to-peer. While it's not actually making them much money, I think it's a good side of the business all the same. So it's the CashApp business then that really interests me. If they can essentially grow their seller side of the business enough so that it funds the future growth of the business, essentially that leaves everything that's generated in gross profit from the CashApp as actually earnings for the business, then I can see this business growing substantially over the next couple of years in valuation. It's not hard for me to imagine this being a $200 billion market cap in 4 to 5 years. What I will say though is we need to be considering the risks associated with investing in a business like this, because a lot of what I see on YouTube are people just saying buy, it's brilliant, it's fantastic, Square, financial technology, the future of banking is going to disrupt everything. But what you have to remember is this is just a 40 billion market cap company, and they're not actually generating earnings. They are generating gross profit, but they're spending a lot of it then to try and develop the business. But if you take a company like Apple that absolutely reams off cash, if they wanted to, they could invest way more in a product than Square could ever do. And they could essentially offer some sort of incentive for people to come onto their product, essentially lose money because they're making so much money off the iPhone side of the business. They could just afford to lose money on this side of the business just to get monthly active users coming in. They could grow the business and then they'd start turning a profit, and they could completely demolish the Square's business model, because there's nothing here really in terms of a moat. There's not patents or anything. I'm in Ireland and I use an app called Revolut, which essentially offers the exact same thing. I can buy Bitcoin on it, I can buy gold, I can buy shares in companies. So there's nothing unique here that Square are doing as far as I can see. They're doing a very good job in doing what they're doing, but I don't think they're immune to another business taking their market share. So at the moment, Square is kind of trading to a discount to its historical multiples at about 6 times revenue. But I think Square's exposure to small and medium businesses really puts it at risk for Q2 of this year. And I think we'll probably see a further opportunity to buy in to Square at a much cheaper price if we hold out. Now, I'm not saying that's definitely going to happen, because you never know with the stock market. But my strategy here, considering the risks that I kind of just outlined, is to hold off. I'm not going to take a position at this price. I've bought one share just to kind of fuel my curiosity so I continue researching the company. But I'm going to wait to see what happens. And if the share comes back down to that kind of 60-50 range, I'll start getting excited about it and considering actually taking a full position. But at the moment, there's just nothing really enticing me to buy a position in the company. I think it's a little bit overvalued considering the economic environment we're currently in, and considering the fact that there is a lot of risks associated with the business and its future growth. I mean, everything here is valued on growth, and if they can't grow at the rate that's expected of them, if somebody else comes in and takes market share, such as your Facebooks, your Apples, your Amazons, then Square's business is really going to be in jeopardy, and we're not going to see those growth rates that the market is currently expecting. One thing I will just end with is I do like the fact that Jack Dorsey is the CEO. I think he's an interesting guy. He also has a huge amount of shares in the company. He doesn't actually take any salary. I think he's paid about $2 a year, which is just tick the box exercise, and he holds 50% of the voting rights. So he's still very much founder, owner, CEO, which I really like. Okay, with that being said, guys, I hope you got value out of this video. I hope it brought a little bit of clarity to Square's business, and I hope it brought a kind of a rounded, balanced opinion on them. I really want to bring thorough, balanced opinions to you guys, so you're not just looking at a lot of what I see on YouTube, which is just pump stocks, and without actually looking at the risks and without actually making a comparative analysis to other companies. I made a video on Illumina going back a couple of weeks ago, and I think they're a much more interesting company than Square in terms of they've got a lot of future upside, but they're also actually making money at the moment, which is key. And they've got 70% market share, protected by patents and technology and everything. So I think, what we have to do when it comes to investing is, look at a company, research it, understand the risks, understand the growth, understand the potential, but also compare it to other stocks that we've been analysing and try and do a comparative analysis there to see where we can best put our money. Okay guys, so thanks so much for watching the video. I really hope it brought some value and clarity to you. If you did get value from it, please consider liking the video. It really helps me promote the channel. Also consider subscribing to the channel and hitting the notifications bell. As always, have a lovely day, and I'll see you in the next video. Thanks so much for watching.